Yo, what's good, CEOs? It's your boy CEO Sean. So remember I told y'all, drop y'all questions in the comment section. I'm going to make videos on them. So we doing that right now in this video specifically. So somebody asked a question about time frame continuity regarding scalping, right? So if you're scalping on a 1 minute time frame, right, do I need time frame continuity? Whether it's the hourly time frame, whatever, like what time frames do I need to incorporate if I'm a scalper and I'm trying to scalp and enter positions in the market? Right, so I wanted to kind of answer this in this video. Does time frame continuity apply to scalpers? So remember on the last video, I talked about the different participation groups. There's the monthly participation group, the weekly participation group, the daily, hourly, and minutes participation groups as well, right? So I talked about all these different time frames, and I showed the hierarchy is basically monthly all the way down to the minutes. Right? So it might be thinking like, okay, well, do I need the monthly time frame if I'm trading on the 1 minute? Right? That doesn't really make any sense. So I'm going to give you guys an example of what a hierarchy system looks like in terms of using multiple time frames in order to take a scalp trade, right? So remember, I basically talked about, again, this is the monthly, weekly, daily, and hourly, right? So this is traditionally how I look for setups and stuff like that, and I overall basically just scan the market, right? I scan from the monthly all the way down to the hourly, right? Because the monthly shows what's happening this month, weekly shows me what's happening this week, the daily shows me what's happening today, and the hour shows what's happening right now, right? So if I go over to the daily time frame, right? So the first thing we're going to do is look for, okay, what do I see potentially setting up, right? So as I can see right here, price before today was setting up for a 212 continuation to the upside, right? 212 continuation or potential 212 reversal, right? But because the weekly time frame, monthly, and quarterly time frame are all bullish, I'm looking for price to do a bullish actionable signal, right? So what I would basically do is I'll basically look for this. So I will mark out my entry. So this would be my trigger on the daily time frame. So when price breaks above this inside candle, that is now a 212 continuation, which is an actionable signal. So I'm going to look to take that to the upside. And then these are going to be my targets that I'm basically going to use, right? So I'm going to copy this, paste that, boom. So not gonna lie, it hit a couple targets today on the daily time frame, right? To knock out all these previous highs that were established before. Now, this is what's happening today. So I know what's happening today. When price is above this blue line, aka the actionable signal, right, for a 212 continuation on the daily time frame, I'm going to go on the lower time frames and I'm going to start looking for actionable signals to go to the upside. Why? Because the daily's up, the weekly's up, the monthly's up, and quarterly's up. I want to go in the direction of time frame continuity. If time frame is continuing to the upside, I'm going to go to the upside. So we drop down to the hour to see what is happening right now. So if we go back to here, right, price had broke above this previously. That was at night, at 10 o'clock at night. Price had broke above it to do a 212 continuation to the upside, right? And then eventually it started to pull back. So it pulled back and retraced. And if you notice, I don't know if y'all noticed this, but I noticed it, right? Right here, price broke this previous low right here. And then it rejected off of that, right? So it's starting to create and set up for a broadening formation. So if I mark out this low to this low right here, and I mark out this high to this high, okay, bet. I see there's a broadening formation happening right now, and I can look for price to go up and take out the other side of the range, which is right here. I can look for price to go and do that. So in order for price to do that, what does it need to do? It needs to set up for a reversal, right? So I can go and say, all right, bet, this is a 2 down. Then we have a 2 down here, but it failed. Why did it fail? It came down, but then closed as a bullish candle. And it also closed as a hammer candlestick pattern, right? And I talked about that in one of the other videos, right? So it closed as a hammer candlestick pattern. So it's setting up to do a 2 down, 2 up reversal right here. So if I mark out, where's my line at? Where'd it go? Oh, here it is. I'm over here covering up with my loom thing. Let me move this out the way, right? So if I put this right here, this is going to be my trigger on the hourly time frame. Meaning when price breaks above this high right here on the hourly time frame, right? Then that means that price is going to go to the upside, right? And we're going to re-trigger, right, the 212 continuation to the upside, and price is going to hopefully continue to go to the upside, right? So we'll see. So we already took out this side of the range, and now we're going back up to take out the other side of the range. So look at it like this too, because I talked to y'all about broad information on the last video, and I hope that was really helpful, right? But one of the things I wanted to cover and show you guys is this is basically how I want you to literally look at it like this, right? So imagine this is the previous candle, right? This is the previous candle. And what I want to show you guys, this is what broad information looks like. Price came down all the way down here, and then price came back up above this level. That creates the broadening formation. So what I'm looking for is all the breakout traders that were entering positions to sell this thing to the downside right here, all of them are dead underwater now, right? When price broke that low, they're dead underwater. Price is coming back up. Buyers are entering the market right there to send price to the upside. So this is what I'm looking for. So when price comes back into the range, what am I looking for? Price to go to the upside. Why? Because on the daily time frame, the weekly time frame, and the monthly time frame, and also the quarterly time frame, buyers are still buying. They're still aggressively hitting the offer, aka they're aggressively trying to get their orders filled so they can push price to the upside, right? So they entered and filled their orders here, and now they're sending price up, so it's setting up for reversal. So I recommend if you're trading, if you're scalping, I still recommend you have the daily and the hourly time frame up, right? In the next time frame, I recommend you check is either the 15 or the 30-minute time frame. Let's just say the 15-minute, for example, right? So right here, what do I see on the 15-minute? Price came down, came back up on this inside candle right here, and then boom, what did it do? Came back up, did a 2, failed, right? Then price came back down, did a 3, right? Because it did a 2 down, then it came back up and did a 3, right? So what is this showing me? This is showing me that sellers were trying to push price down, right? So sellers tried to get active here. Buyers started to get their orders filled right here and started pushing price higher. Sellers tried to push price back down, and then buyers stepped in and they couldn't do it anymore and they failed. Meaning that buyers are stepping into the market, so now we have an opportunity to get a position in the market. So if you want to, this is where if you want to drop down to a 1-minute time frame, this is what I recommend you do, right? I recommend you have multiple charts up, right? This is what I recommend you do. So have this on, let's say, the daily time frame, right? Or at least mark out your daily level. So this blue level right here, that's my daily level. So if I want, I don't have to necessarily look at the daily time frame. I could just go on the hourly time frame, right? Why? Because I know as long as price is above this daily level, or it's at least trying to target that daily level and keep going up, then that means that buyers are still in control and that I'm going to look for bullish, actionable signals to the upside, right? So this is what I'm looking for. So in the hourly time frame, what do I see? 2 down, followed by another 2 up, reversal to the upside. As long as that's going up, bet. The hourly is going up. So if the hourly is going up, any time frame literally below the hourly time frame, that's a bullish actionable signal, that's a good for me to take to the upside. So that's what I mean by using time frame continuity. You're using the daily time frame, hourly time frame, and then the next time frame bracket you could kind of use is a 30-minute and a 15-minute, right? Either one is fine, right? But again, the more time frames you're looking at, the better anyway, right? So daily, hourly, 15-minute, and then for me, what I'll do is anything below the 15-minute, the 5-minute, 3-minute, 1-minute, they're basically the same thing, right? But again, the bigger the time frame, that's the hierarchy. So 1 minute, maybe 5 minute, 15-minute, 30-minute, 1 hour, right? But if you were to use 4, because remember I said for time frame continuity, you want to have 4. Use the daily because it's telling you what's happening today. I'm pretty sure if you're scalping, you want to know what's happening today. If you're trading right now, you want to know what's happening right now. So if the hourly is bullish right now, then that means you want to be taking buy setups or scalps on the 1-minute time frame right now, right? So let me show you what I'll do. So I'll reserve these just for the hourly time frame, and then I'm gonna pull up the daily right here. So I'm just looking at this. As long as the daily is above that blue level, I'm just gonna keep buying. I'm gonna keep buying, right? Hourly time frame, what did it do? It set up for a broad information, took out the low, and now it's about to go back up and take out the high. So I can drop down to the 15-minute time frame and look for actionable signals to go to the upside. So what does price do? There's not like a lot of clean setups, but you could take this 2 go 3, which is basically a 2 down, going for a 3, going for an outside bar, right? Which is literally what's happening right here. What did price do? It went 2 down right here on the hour, setting up to go and become a broadening formation, aka on another time frame, that's a 3, right? So that's basically what this is setting up for. So now if I go on the 1 minute for all the scalpers, Here's what we do. Let's drop down. What do I see right here? So this is the 15-minute actionable signal, right? No, the hourly actionable signal, my bad. That's the light blue line is the actionable signal on the hourly time frame, right? So I'll go on the hourly time frame, be like, all right, bet. As long as price is above this blue line on the hourly time frame, then price is going to the upside, right? So now what do I see right here? I see price broke to the upside. It did pull back down, right? But what do we do right here? We broke this low right here. What are we setting up for? Broad information. I connect this low to this low right here. Boom. What do? We came down, took out a low, set up for an actionable signal to go to the upside. And what do? We pushed up, came back down. What do we set up for? A 2-2 reversal. Boom. I can take that to the upside. Go long right here. And why am I going long here? I'm going long here to re-trigger the hourly time frame. Because the hourly time frame, remember, as long as price is above this light blue level right here at 18,740, then that means that price is a 2-2 reversal to the upside, and that means that it's in force up on the hourly time frame. So that's what I'm looking to re-trigger, right? And even if I took this 2-2 reversal right here, cool. I took this 2-2 reversal right here. Might have took some profit right around this area, set my stop loss at break even. I got stopped out on this trade, right? I got stopped out right there. That's fine. I'm just going to look for the next actionable signal to go to the upside, right? So you can either, and this is like this, the way that I like to scalp to go into a day trade, meaning I like to get a really tight entry, because this is like, look at this stop loss. That's a 3.7 point stop loss, right? So I'm risking $3.75 on this position with a potential target of, let's just mark out what this target would be on the hourly time frame. Because remember, actionable signal, 2 down, 2 up reversal. My first target on the hourly would be right here. So if I marked out this target right here, this trade that I just entered right here will go for a 4.8 risk to reward just off of that. Not to mention price just kept continuing to the upside, right? So I like to enter positions like this. 2-2 reversal, I enter the position here. It re-triggers the hourly time frame. I get in this position. It keeps going to the upside. I move my stop loss to break even, and I just hold the trade at that point. Because that's a winning trade right there. I keep holding it. I let it be. And then as you can see, for the rest of the day, price just kept going up. It kept going higher and higher and higher. This is what I'm saying. This is how you can get really great entries. And then you can keep getting re-entries throughout the day. That's what I'm saying. You can get re-entries throughout the day. So right here, what do we see? We have a 2 down, 2 up reversal right here on the 15-minute time frame. As long as price is above the daily time frame, as long as price is above the hourly time frame, guess what? Price is still bullish. So I can look for bullish setups to go in the market. So what do I see right here? We have a 2 up, 2 down, 2 up reversal. Boom. Trigger on the 15 minutes. So above that that yellow line on the 15-minute time frame, I can take that to the upside. What does that look like on the 1 minute? Let's go right here. What does that look like on the 1 minute? You look at my crosshairs real quick. Boom. So right here, what do I see? New candle flips right. It's so fun. Look at how beautiful that works. You just look at my crosshair real quick. Look at the 15-minute. Look at where my 1 minute crosshair is. So this is a 2 up inside candle. Next candle is a 2 up continuation. So a 2-1-2 continuation to the upside. And the new candle for the 15-minute flips, and it opens up as a bullish green candle, and it starts going to the upside. That is a simultaneous break. That's what I call a simultaneous break, right? So the 1 minute is breaking, the 15-minute is about to break and continue to the upside. So right here, this is going to be my entry. Boom. 2-1-2 continuation to trigger the 15-minute. And guess what the first target is going to be if we're entering from that 15-minute perspective? Boom. First target is going to be right here. 2-2 reversal. I can make that my target. I can target this. That's 11 points right there. So if you trade, so for example, you have a small account and you're trading MNQ, for example, then that'll be, it's $2 a point. Meaning you can make, so on this trade, if you had like one contract, that'll be roughly $22.50. If you had 2 contracts, that's $45. 4 contracts, that's $90, right? So the more contracts that you have, you can make more on that account. But if you have a small account, you can just compound doing that. Because remember, you got the trade from before, and then you got this trade that you just entered, and now there's so many entries today. But that's how you can scalp using, again, the same, like, again, all these principles are the same. What is this? This is a broad information right here. This low got taken out. Boom. Right after that low got taken out, what happened? There was an entry right there too. Price went down. What did it do? It went down. It didn't reverse. It did an inside candle, continuation to the downside, right? We did a 2-2 reversal right here. Then it failed, right? Because again, like, not gonna lie, if you're on a 1 minute time frame, these setups gonna fail. That's why we use the bigger time frame. Because typically we could just. That's why I like that's why I like the daily, the hourly, the 15 minute, maybe the 5 minute too. Because they just hold. I don't know. They just hold. Like you see right here, it does a 2 down, 2 up. It just flies, right? So, but this is again, this is for the scalpers, right? This is to answer your question. So you can enter this position right here, and what's the target right here? We're targeting price finishing this broad information. So right here, the broad information is if I mark out this high to this high, right? So you're targeting price, just breaking that high right here of that level. That's why that's the target. So I can enter this position right here. Again, it's $2 stop loss. If you have one MEQ contract that's $2 a point, you're only risking $4 on this trade to make what? $4 on this trade to make $15, so $30. So you're risking $4 to make $30 on one trade with one contract. So if you add more contracts, you get the gist. You're risking $20 to make $150 on that trade. That's the beauty. That's the beauty of how this works, right? So that's how you use this is so when it comes to time frame continuity, I want you guys to realize that it doesn't necessarily matter the time frames that you use. Just use them as a domino effect. So if you use the 1 minute, use 3 subsequent higher time frames. So the 1 minute, you can have the 1 minute, 5 minute, 15 minute, hourly. Right? Because the hourly is telling you got to have that hourly or at least the daily. Because the hourly is telling you what's happening right now. If the hourly is bearish, you should be looking for bearish setups. If the hourly is bullish, you should be looking for bullish setups. Right? Because the hourly is telling you what are buyers and sellers doing in the market right now. And it can tell you what to do and what not to do. Right? And the daily does the same thing. It's telling you what's happening today. So today and right now, if the daily time frame is red and the hourly time frame is red, that means this is what I'm hearing. Today sellers are selling, and right now sellers are selling. Guess what I'm supposed to be doing right now? Today and right now I'm supposed to be selling. That's what I'm supposed to do, right? So again, I hope this answers your question. So just to reiterate the question, right? You said I can use the strat on any time frame. So if I'm a scalper, I don't need to have full time frame continuity. If you're a scalper, you still need full time frame continuity, but the time frames that you use are just slightly different, right? So I hope this video helped you with picking what time frames do you need to use or should you use if you're a scalper, right? So if you have any more questions, again, I'll make more videos on this because, again, I just want to make sure you guys understand how to use the strat and different things like that. And I'm also going to put some more resources in the chat as well that I actually got from Rob Smith. This is one of the articles that he actually created, basically breaking down the psychology of the strat, to basically give you a little bit more context and stuff like that as well. So this should also help you out. I'm gonna make sure I put this in the description as well for you guys. But yeah, if you guys have any more questions, again, feel free to ask me. I'm gonna do more videos like this. If you guys liked it, please leave a like, subscribe, and I'll see you guys in the next video.